The European Exchange-Traded Fund (ETF) industry has been a beacon of growth, with a remarkable 14% compound annual growth since 2010. However, a recent study by ETF Stream sheds light on a less glamorous reality. Only half of UCITS ETFs in Europe are currently operating in profitable territory based on assets and fees. Over the past 13 years, European-listed ETF assets under management (AUM) have seen an extraordinary eightfold increase, soaring from $208 billion to an impressive $1.6 trillion. This growth story is not without its complexities, as the ETF roster itself doubled from 935 to 1852 during the same period. The 14% compound annual growth figure often touted by industry participants paints a rosy picture, but the recent findings suggest a more nuanced narrative. It appears that beneath the surface of this impressive growth, profitability remains a challenge for a significant portion of European ETFs. The study's focus on UCITS ETFs, a popular type of ETF structure in Europe, highlights the importance of understanding the dynamics of assets and fees. The profitability of these funds hinges on effective management and the ability to balance costs with asset growth. The doubling of the ETF roster raises questions about market saturation and the potential challenges new entrants face in gaining a foothold. As competition intensifies, the ability to attract assets becomes crucial for profitability. The doubling of the ETF roster over the past 13 years not only signifies the industry's rapid expansion, but also prompts critical questions about market saturation and the hurdles new entrants may encounter. The influx of new ETFs introduces a heightened level of competition, creating a landscape where attracting assets becomes paramount for achieving and sustaining profitability. In a market where variety can be perceived as both a strength and a challenge, the increasing number of ETF options requires careful consideration from investors and fund managers alike. With a broader selection of funds available, investors are presented with more choices, but this abundance also raises the bar for new entrants seeking to distinguish themselves. As competition intensifies, the ability to stand out and capture the attention of investors becomes a central factor in determining success. ETF providers must differentiate their offerings, whether through unique strategies, specialized themes, or innovative structures, to carve out a niche in the increasingly crowded market. This process of differentiation goes hand in hand with the challenge of attracting assets, as investors are more likely to allocate their funds to ETFs that offer distinct value propositions. Moreover, the competition for assets brings cost considerations to the forefront. Lowering fees or offering competitive expense ratios can be a strategic move to entice investors, but it adds pressure on fund managers to balance costs with the need for profitability. This delicate balancing act is crucial, especially considering the findings that only half of UCITS ETFs are currently operating in profit-making territory. In essence, the doubling of the ETF roster signals not only growth but a heightened level of complexity and competition within the European ETF landscape. New entrants face the dual challenge of navigating a saturated market and strategically attracting assets to ensure financial viability. As the industry matures, the ability to innovate, differentiate, and effectively manage costs will be instrumental in determining which ETFs thrive in this dynamic and competitive environment. Despite the apparent challenges, the European ETF market's growth cannot be understated. The $1.6 trillion AUM figure is a testament to the increasing acceptance of ETFs as a mainstream investment vehicle. Investors are drawn to the transparency, liquidity, and cost-effectiveness offered by these funds. However, the industry now faces a critical juncture where sustained growth requires a closer look at profitability. It prompts fund managers, investors, and regulators to collaboratively explore strategies for enhancing the financial health of ETFs. The current state of the European ETF industry suggests that it stands at a crucial crossroads, where sustained growth necessitates a thorough examination of profitability. This critical juncture calls for a collaborative effort involving fund managers, investors, and regulators to explore and implement strategies aimed at enhancing the financial health of ETFs. Fund managers play a pivotal role in steering the industry towards profitability. They are tasked with making prudent investment decisions, optimizing fund structures, and effectively managing costs. As the landscape evolves, fund managers must adapt their strategies to align with the changing dynamics of the market, ensuring that their funds remain competitive and financially viable. Investors, too, are integral to the equation. Their decisions regarding fund allocation, coupled with an increasing awareness of the nuances of ETF profitability, can shape the direction of the industry. Investors are likely to favor funds that not only offer attractive returns but also exhibit a sustainable and profitable business model. This shift in investor sentiment can act as a driving force for the industry to prioritize profitability and adopt measures that contribute to the long-term success of ETFs. Regulators, as overseers of the financial landscape, also play a crucial role in shaping the industry's trajectory. They can implement policies and guidelines that foster an environment conducive to ETF profitability. Striking a balance between encouraging innovation and ensuring investor protection, regulators can create a framework that incentivizes responsible practices among ETF providers. The collaborative exploration of strategies is key to navigating the challenges posed by the current landscape. This can involve discussions on fee structures, operational efficiency, and regulatory frameworks. Fund managers can share best practices, investors can communicate their preferences, and regulators can provide a supportive framework that promotes a healthy and sustainable ETF ecosystem. In essence, the critical juncture faced by the European ETF industry calls for a united effort from all stakeholders. By fostering collaboration among fund managers, investors, and regulators, the industry can chart a course that not only ensures sustained growth but also prioritizes the profitability and long-term financial health of ETFs. In conclusion, while the European ETF industry celebrates its remarkable growth, the profitability challenges faced by half of UCITS ETFs highlight the need for a more comprehensive analysis. As the market continues to evolve, stakeholders must address the intricacies of asset management and fees to ensure the long-term sustainability of this burgeoning sector.